Good morning, traders. It is Friday, August 15th. Taking a look at the charts, equities are a little bit mixed this morning. We have the Russell 2000 up 0.2%. The Dow is actually up almost is up 0.5%. SP 500 flat, and the Nasdaq down slightly. But yesterday, really over the past week, we've seen some interesting money flows just on our 30-minute tools here, showing us that the market has gone into a FOMO where it went from an oversold condition to ripping higher and closing very strong with FOMO. And that led to, we talked about this at the close at that day, how the market was set to likely gap and open the higher the following day. And then we'll probably see some short-term selling and a bit of a pause before it wants to go higher. FOMO is when everybody chases things and it's a little too crowded of a trade. The market usually will try and suck a few more people in, or at least it'll just pull back and go sideways for a session or two. And we saw that again really right over here. We had FOMO this day. The market gapped higher and muscled its way up to the close. And then we saw the following day it gapped higher, getting people in. And then, of course, after usually a wave of FOMO, we see a bit of a pause. And we've had that pause. And what's kind of interesting is we actually had a bunch of panic selling yesterday, which most people, well, I did see fear. This indicator tells us there is fear. I saw fear in our emails. I saw fear in some comments and things like that. So people were fearful and they were dumping shares yesterday. And what's interesting is the stock market really just traded sideways. It held up really well. The S&P 500, the Nasdaq, again, held up very well. Also, I didn't look at the Dow. Let's take a look at the Dow. Dow is a little more volatile. It took a little bit of pressure in the morning, but kind of rallied back up in the afternoon. What took it the most was the Russell 2000. And this is where the majority of emotional traders, well, it's not where the majority of them are, but these stocks are small cap stocks. So they have less liquidity. When there's selling pressure, they get hit harder because there's not as many buyers. So when we have panic selling and we have FOMO, you can see the moves can be a lot bigger because they're smaller cap stocks. They move faster. So they got hit pretty hard in the grand scheme of things. Let's take a look over at, I haven't looked at the dividend stocks in a while. Dividend stocks had a nice pop there. They did have a big gap down yesterday, but they muscled their way back up. Obviously, they're still struggling. When we look at this, I'm not a huge fan of this overall chart pattern. It's a giant, staircase to the downside. Overall, we'll see how dividend stocks play out, but they really have been slowly recovering and trying to figure out how they are going to move. I think there's going to be interesting play here. Let's take a look at the energy space. We haven't looked at that in a little bit. The energy space started to move down. It was getting close to potentially an inverse trade, a discretionary trade, which we're not in that phase yet. We held off on that because of the market conditions, and I'm thinking we're still going to get a bit of a bounce and move up here. But overall, you can see if we zoom in on this chart, you can actually see we have on our 30-minute chart, we've got an overbought market condition, and we actually have one right over here as well. This red shaded background tells us the market's rallied up, and usually there's a bit of sellers step in and they kind of lock in gains and move back down. And we got red bars, and that's usually what happens when the market gets a little overbought. Sellers step in. Short, again, very short term. This is a 30-minute chart. It gets up here, and then in 30 minutes, boom, it gets wiped out. Up here, we could see a little bit of selling this morning. But overall, the energy stocks are big dividend play. Let's take a look over the real estate stocks. Excuse me. Real estate stocks aren't performing very well either. They're not the best looking chart pattern. Very similar to the dividend stocks where it sells off, bear flag, sells off, or it's just a big ugly stair step to the downside. So that's, I think, part of the reason why we're not seeing the dividend stocks really take off and extend and get anywhere near all-time highs is simply because big energy and IYR are struggling. And let's take a look at the financials, because the financials do pay dividends. They're actually holding up fairly well. So they're not being the big drag on them at this point. Let's take a look at the rest of the markets here. We've got gold relatively flat. Again, gold, silver, miners, I am bullish on them over the next month or two. I think they are going to move higher, but right now they're still out of favor, and we're not really looking to do anything at that point. Silver down about 0.4%, took a bit of a pullback there yesterday as well. Again, trading sideways, trying to figure out what it's to do. And this just goes to show the volatility in silver. Like, look at the 30-minute chart. It goes from a downtrend, which are red bars, to overbought, to neutral to a downtrend to neutral. Like, it's all over the place. That's why I'm not a huge fan of trading silver unless we're like what I believe in, like a raging bull market for precious metals. While gold has been moving up really nicely, silver and the miners, they're not really full on in the mode that I like at this point yet. But again, there's still, silver's had a nice move up. It's consolidating, chopping through here. And if the stock market does continue to struggle or start to go down, we could see precious metals have that next leg higher, which is what we're looking for. So silver is just more volatile. Nothing wrong with it. It's just not the type of price action that I like to deal with, unless it's very small amounts of money. If we take a look over at Bitcoin, Bitcoin had a nice little run up and pop here. We ended up hitting our target right up near the highs and closed out that trade. The position on that very quick, very short-lived, a small little gain in and out. Closed out a nice little win. We're set to hit, I think, another target today on another trade on our ban hot list. We'll see. We were pennies away from it yesterday for that. But overall, the market here is just trying to work itself out. When we look at the grand scheme of things, if we look at, let's just go back to the stock indices here. Again, the markets are trending higher. And we're just walking up this 5-day moving average, which is this light blue line. And we just had panic selling yesterday. And typically after panic selling, we start to see the stock market push higher. And let's take a look over the put-call ratio and the VIX. So the put-call ratio, in the grand scheme of things, is still fairly low. It's in a fairly neutral spot. People are still fairly bullish and buying call options. No real insight on that. When we look at the VIX is low. It continues to fade down. And we're definitely seeing FOMO in this market. Typically, when the stock market keeps pushing up, hitting these all-time highs, and the VIX is fading down, this is when people feel the most FOMO, that if they're not in the market, they feel like they're missing out. And so we keep seeing waves of that going forward. And that's what's happening with the S&P 500 and the NASDAQ. They keep bumping up and pushing to new all-time highs. And if today we get another push and rally, it's going to be people having maximum FOMO. If you're not taking part of these rallies that have been through here since the early sell-off early this year, this is when you're going to feel a lot of pain, especially on a Friday. If the market closes here at all-time highs on a Friday, it's enough to really apply a lot of pain. It's like sticking a knife and twisting it for those who aren't in a position and taking advantage of this market moving higher. Anyways, other than that, that's about it. Not a whole lot going on. Let's take a look at platinum and palladium actually real quick. Big bear flag pattern. This at any point could fall out of bed. I'm not a fan of platinum there. Look at palladium. Doesn't look the greatest either. It might be trying to carve out a bit of a bottom, but is still in a downtrend, and it could just let loose and continue to unwind. They've had their moves, they've had their excitement, and I feel like that has fizzled out for now. So anyways, that's it for now. Take care. Bye-bye.